Intel's stock is up 442.9% in the last 52 weeks. No, that's not a typo. And no, this isn't 1999, this is 2026. And the company that spent years being a punchline in the chip world is now showing up to the AI data center fight swinging hard. Here's the thing that gets me. While Nvidia is sitting on a $5.4 trillion market cap and AMD just locked down a deal with OpenAI covering 6 gigawatts of computing capacity, Intel, the company that missed the GPU wave, missed the mobile wave, and has been losing market share for years, Intel is still up 190% year to date in 2026. The market is telling you something. Whether it's right, that's exactly what we're going to break down today. So ensure you watch to the end to find out what is really happening. This video expands on my recent article for Backup. The link to read it fully is in the description. If you're into stocks and markets, hit that like button and subscribe for more breakdowns like this. Let's get into it. The centerpiece of Intel's comeback story has a name: Crescent Island. At Computex 2026, Intel pulled the curtain back on this new data center GPU, a chip aimed squarely at the same market that Nvidia and AMD have been splitting between themselves for years. Test units are expected to reach customers in the second half of 2026, so we're talking late Q3 or Q4 delivery. But here's some context you need. Back in February 2026, CEO Lip Bhutan told investors straight up, Intel is building a fresh GPU effort led by Eric Demers and Kevok Kichichian with a clear mission: break into the data center market dominated by Nvidia and AMD. No dancing around it. Now, why does this matter? Because Jensen Huang himself, Nvidia's CEO, has said AI data center buildouts could hit $1 trillion by 2028. $1 trillion. That's not a niche market, that's the entire future of computing infrastructure. If Intel can grab even 5% of that, the math starts to look interesting very quickly. But, and this is a massive but, Intel has tried this before. Remember Gaudi, Intel's previous AI accelerator chip? It launched, it existed, nobody cared. Cloud providers didn't rush to adopt it. Big enterprises shrugged. Crescent Island can't just show up. It has to actually win deals. The good news is that Intel's been restructuring under the hood. They've been pulling capacity away from consumer PCs and pushing harder into server chips, which has already boosted data center revenue to $4.7 billion in the latest quarter. They're also putting $14.2 billion into taking full control of Fab 34 in Ireland and progressing their 18A manufacturing process. In plain English, they're trying to prove they can build these chips at scale, not just design them on a whiteboard. So the chip is real, the ambition is real, but the question is whether Crescent Island becomes Intel's comeback moment or its next expensive lesson. That brings us to the money side of this story. Intel's next earnings report is July 23rd, 2026. Mark that date. Wall Street is expecting EPS of 10 cents for the June 2026 quarter versus a loss of 26 cents a year ago. That's a 138% swing in 1 year, and it gets better. Estimates step up to 14 cents for September 2026 versus 11 cents a year ago. And for the full year 2026, the street is projecting EPS of 63 cents compared to a loss of 12 cents in 2025. That's a 625% turnaround back into profitability. And KeyBanc's analyst John Vin already laid his flag in January 2026. He upgraded Intel to overweight with a $60 price target, specifically calling out the foundry business improvement and stronger server CPU demand tied to AI data center spending. His core argument: Intel doesn't need to beat Nvidia in GPUs to make money. CPU supply tightening, better pricing power, and growing demand for advanced packaging can drive real earnings right now. while the new chips ramp up. But here's where it gets complicated, and you have to hold both things in your head at the same time. While KeyBanc is bullish at $60, the consensus price target across 44 analysts is $88.81, which, given where the stock is trading right now, actually represents a 17.4% downside. The consensus rating? Hold, not buy. Hold. The market has already run so far ahead of analyst expectations that even the bulls are uncomfortable with the current price. So, earnings are going in the right direction, but the stock might already be pricing imperfection. That tension is exactly what you need to understand before we talk about what I actually think. Here's the uncomfortable truth about Intel's grand return. Nvidia and AMD are not sitting still while Intel finds its footing. AMD posted $5.8 billion in data center revenue in Q1 2026, up 57% year over year, reported on May 5th. And in October 2025, they locked in a multi-year deal with OpenAI worth potentially over $60 billion, supplying 6 gigawatts of computing capacity, starting with the first gigawatt of MI450 GPUs in the second half of 2026. AMD is now embedded in the AI infrastructure of the most important AI company on the planet. Nvidia, even more extreme. At GTC 2026 in March, Jensen Huang forecasted $1 trillion in orders for Blackwell and Vera Rubin through 2027. The Vera Rubin platform is now ramping into full production, with shipments starting for 2026. This isn't just a hardware gap, it's the CUDA software ecosystem, the developer lock-in, the entire workflow that hyperscalers like Google, Microsoft, and Amazon have built their AI infrastructure around since 2007. That moat doesn't disappear overnight. So Intel's real play isn't dethrone Nvidia, it's be the diversification chip. And honestly, with geopolitical pressure mounting to reduce dependence on any single chip maker, that argument has real legs. The question is whether Crescent Island is good enough to earn that seat at the table. And we'll start getting real answers when test units land in Q3 or Q4 2026. Alright, here's where I stand. Intel is a high beta bet on AI infrastructure diversification, not a Nvidia challenger. The risk/reward here is volatile. If you're in, size it accordingly. And watch that July 23rd earnings date like a hawk. This is not financial advice. Always do your own research before buying any stock. Past performance does not guarantee future results. If this helped, smash the like button, subscribe, and turn on notifications. Drop a comment. What do you think about INTC? Can Crescent Island actually challenge Nvidia and AMD, or is this hype? And which stock should I cover next? Let me know below.